Welcome to Crypto Radio. We interview top thinkers and entrepreneurs in the cryptocurrency and blockchain industry. We also cover topics like investing, trading, and ICOs. We're your hosts, Mike Gilliland, Michael Pohl, Chris Sparks, and Yuvi Ivanova. We're entrepreneurs, crypto investors, and co-founders of a new blockchain investment platform called CoSyndicate.io. We created CoSyndicate and Crypto Radio to make crypto investing a better experience for you. In the first few episodes of this podcast, we're going to cover the basics of Bitcoin, blockchains, and crypto investing. If you're new to the space, these episodes are for you. If not, skip ahead to the episodes where we start to interview founders of blockchain projects and update you on all the news and important events in the crypto world. Over the next few episodes, we're going to be running a contest to give you a chance to win over $3,000 worth of prizes, including CoSyndicate tokens and a free membership to our private investment mastermind group. To learn how to participate, go to cryptoradio.io.
People should really sort of understand, I think, that the current form of Bitcoin that we have, as far as people see it as something that's worth $17,000, this is a very new thing for Bitcoin in a long-term context. Bitcoin has become something that holds value very well, and people all agree that it's a store of value now. But the regulation question keeps on coming up, I think, in everyone's mind. Is it going to be regulated? Has it been regulated? And maybe you guys can sort of illuminate that for the audience a little bit.
Yeah, I think it comes back to the question of legality and what governments can actually do to regulate it. So they can kind of regulate the players in a way, like they could, could try and take out the miners who are, providing value to the network. They could try and control the exchanges and those people they can identify. But in terms of regulating the use of it, it's almost impossible because it's all happening all the time. They don't have the manpower, the resources to even stop people. So typically when they try and regulate something is they'll create a reason why they need to regulate it. Like you're saying, it's used for criminals or it's dangerous or, it's a bubble. We need to protect people. So there's always some pretext for coming in and regulating something. But typically all it is about controlling it for the purposes of, taxing it or forcing people to use it in a certain way or creating your own version of something and saying, this is the safe one. We need to regulate and use the safe version. Everyone else can use the dangerous version that's going to be unsafe. So I think people have to use their own minds to decide what is in the best interest for you may not be in the best interest for the government. And you have to, it's country by country in terms of, what the regulations are going to be. I think the more progressive countries like South Korea are actually really embracing, cryptocurrencies in general. So they're starting to see they will have an edge if they embrace this first because it's just a more efficient transfer of value. And those are the kind of countries and jurisdictions you might want to do your business or, look to see who's copying those examples and actually embracing stuff because there's always resistance to change. And that's really what regulation comes down to in this context is like how much can they resist the change and how effective is that going to be against the tidal wave of demand that's just coming and is global, right? So they can't stop it. So regulation is largely ineffective, but it is short-term painful for some people if, their Bitcoins are confiscated or their bank accounts are shut down. And there's certain risks, you have to be aware of in that scenario. But there are governments that are very much more progressive.
On some level, it could create a situation where governments are now competing to be the place that attracts innovation and entrepreneurship, especially as countries like the United States start cracking down on this. Innovation, entrepreneurship is going to move. So as long as there's a country, minimum one, in the world that supports blockchains and ICOs and cryptocurrencies, then that's where the innovation will take place.
And those countries will thrive because there's now, as of yesterday, the whole market cap of all the cryptocurrencies is, $500 billion? Mm-hmm. Yeah, there's a lot of money in the space. So the governments that embrace it will thrive. That country will thrive. The businesses and the lawyers and all the different service providers in that country will make a lot of money.
Looking at you, Eastern Europe.
Yeah, the regulation is about how much can we control it, how much can we tax it. So the more wealth flows into cryptocurrencies, it starts to become a very attractive asset class to regulate for that purpose. And I think now we're starting to see, like Mike was saying, this competition for capital with, CME, the Chicago Mercantile Exchange, basically opening up Bitcoin futures for trading. That's basically a way of regulating it to kind of divert the capital flow into, recognized exchanges that are kind of monitored and controlled by the governments. So that's not really how Bitcoin was designed to be used, but obviously speculators and governments and, institutions like CME will look to take advantage of this growing space. So you've got to be aware there's definitely, they'll call it Bitcoin, but actually you're not trading Bitcoin, you're just betting on the price of Bitcoin. And people may get burned that way. So that's something you got to be also aware of is the different forms of Bitcoin, because now we have a lot of derivatives being added into the equation.
Let's just pretend for a second that I'm not an anarchist at heart and that I've got two options. I've got a network-based Bitcoin the one that we have in the world today. And then there's another option, I think, that Michael was explaining earlier about something that a government might put into the world to, sort of facade as Bitcoin. Why should I trust the open source Bitcoin that we're talking about today as opposed to one that's been spun up by a government?
I think it all comes down to confidence. And so the reason Bitcoin is so popular is because confidence is failing in fiat currencies because they're not stable over time because of the actors involved. So it all comes down to counterparty risk of the asset you're holding. And counterparty risk is who's in control of the issuance of that currency. And if that's a few people in a room who can make decisions that affect the rest of the world, that's not a very fair system. Where it's something that's open source and voluntary and you can choose to use it, you're not forced to use it to pay your taxes or to have a job, then I think that's just something that will compete on its own merits. It won't have to fight against the corrupt system we have today.
So there's an article on Medium by a guy called Daniel Jeffries. It's one of the most popular Bitcoin articles out there. It's called Why Everyone Missed the Most Mind-Blowing Feature of Cryptocurrency. And that's exactly the point that he's making, is that the normal monetary system is coercive in its nature because governments, in a way, force you to use their currency because you have to use it to buy things and you have to use it to get paid in your job and you have to use it to pay taxes. But nobody can force you to use Bitcoin. It's completely voluntary. And that's what makes it so different than any cryptocurrency made by a government or any other currency out there.
That's why the question, can a bank or can't a government create their own blockchain, their own cryptocurrency? Well, absolutely, yes, and they are. They're doing it right now. But the fact is that we can elect to use it or not. And we've already got other systems that are decentralized and community-driven, and we just simply have the choice which ones to use.
So governments are going to mind, though, if 51% of society starts using cryptocurrencies as opposed to the government-issued standardized currencies. They're going to be bothered by the fact that people are using this technology. So how do you protect yourself? Are you anonymous on this network? Can you actually hide your identity to avoid the leery eye of the US, Chinese, or Russian government?
In terms of these kind of discussions, obviously every government has their own rules, and you generally have to follow the rules or you go to jail. So you have to be careful about you're always getting compliance in that sense. But if you are careful about following the rules, there's many ways of using cryptocurrencies, not just Bitcoin. Definitely, Bitcoin is not anonymous. There are governments that have probably data mined the whole blockchain. They've worked out who owns all the addresses. So when they get exchange details, like they've ordered, I think the IRS ordered Coinbase to hand over all the details. Essentially, there's no anonymity really in Bitcoin in long term. So there's other currencies that are better for that shouldn't really be your primary use or reason for using Bitcoin. You can use it to store value, and as long as you declare it, and as long as you control the private key, no one can really confiscate it from you. So it's more that you are in control of your money. A bank can't just shut it down because they think you owe taxes. And that's the biggest difference, I guess, in how you hold your wealth and protect your wealth.
How is it actually possible for Bitcoins to hold value? What is it about Bitcoin that makes them valuable?
It always comes down to supply and demand. That's what determines the price in any kind of free market. So how many people want something and how many people are offering it. And obviously, we just talked about Bitcoin has a limited or finite supply. And obviously, as the demand grows, because more and more people want to use it, then you've got 7 billion people, competing for 21 million Bitcoin. So that's what it comes down to. It's just supply and demand. And obviously, the more popular it becomes in terms of, awareness and people wanting to use it, then obviously that demand side of the equation really grows. So that's where the price comes from. It's confidence in any ecosystem. That's why the dollar has value today. There's no intrinsic value other than people trust it and have confidence in it. Ultimately, the long-term viability of Bitcoin and where the price is going long-term, what are you measuring the price in? You're measuring it in dollars. And what is dollars? Dollars is a competing system. So if one system is competing against the other and one system is superior, that's the argument you can make, is that the price is in the long term just going to keep going up. So essentially, you can say Bitcoin's going up in dollars, or dollars is losing more value against Bitcoin as more people recognize it's not as effective, it's not as efficient, it's not as trustworthy long term.
That reminded me of something, and somebody once asked Andreas Antonopoulos, when will you know that Bitcoin has become mainstream? And his answer was basically when they stop counting it in dollars and start asking the question, why would we count Bitcoin in dollars? We should count it in Bitcoin.
Yeah, exactly. Purchasing power of real assets. That's what the dollar does. The dollar, you have a certain amount of dollars, you can buy a house, you can buy land. It's the same with Bitcoin. It's how much property and purchasing power in different asset classes will Bitcoin get you.
Is there ever the threat that we could actually have a worthless Bitcoin? What would that scenario look like? How could we avoid it as well?
I think it's very hard to predict more than a few years out really where this technology is going. And obviously in 100 years or 200 years, we could live a completely different world. So just like the dollar has become worthless or is becoming worthless, every reserve currency over time through history tends to become worthless as that system changes and we have a transition to a new system. So we're in the very beginning of a new transition. So I don't think we're close to that sort of end of stage of Bitcoin. There's obviously technology is going to keep evolving. I think other coins can come and maybe do a better job at some of the things Bitcoin is supposed to do. So Bitcoin is losing its dominance in terms of cryptocurrency market cap. If you look at the beginning, you know, there was just pretty much Bitcoin. Then we had a few small altcoins, but Bitcoin was still 95% of the market. Now Bitcoin has dropped down to 30, 40%, come back up to about 70, and it's kind of the long-term trend is down. So I wouldn't say it's becoming worthless, but there are competitors that are also competing for different pieces of the pie, and Bitcoin is not going to be the only game in town for sure.
Right. I guess the market dominance of Bitcoin right now is 53.9% of all cryptocurrencies combined, which is dropping, I guess, which isn't necessarily a bad thing because we can sort of spread the risk a lot more thin.
It proves that it works because there's a whole ecosystem now. It's not just one coin, but people are creating their own, you know, cryptocurrencies for different purposes. So it actually gives validity to what the blockchain technology is able to deliver. It's not just about Bitcoin, it's a much wider ecosystem. I think that's why so many people are interested now is because they realize it's not just a fad, it's not going away. There's new projects coming out every day. So actually it's healthier for an ecosystem for not just to be one player, one participant. It's like a monopoly. You don't want that.
If you look at the share of the pie that Bitcoin has comparing to all the other assets in the world, then it is growing. So the market share of all the cryptocurrencies might be shrinking slightly, but as a share of all the total assets that we have, it's growing.
Yeah, because you're measuring it in dollars. Again, you're measuring it in a fiat currency. That's the system it's trying to replace or that it's competing with. So obviously, if more capital is moving into a more efficient system, then that's going to grow in value how we're measuring it, you know, in dollar terms. But Bitcoin is not the whole, you know, it's not all of cryptocurrency. It's just a piece. And it's a really important piece because it proved the concept.
And let's be perfectly clear about how important that concept of teams of nerds basically coming up with an idea for a cryptocurrency, being able to put it into the world where 5 years ago, 9 years ago, only governments could be doing these things. And now individuals and small teams of people can actually start doing this and getting ridiculous amounts of market share and value flowing into their version of money. Everybody's talking about the Bitcoin bubble. Is everything going parabolic? Will things go tits up in the Bitcoin world in the short and long term?
I think that you have obviously this panic or this wave of, you know, public awareness right now. So it's all over CNBC. People are buying it, you know, without really understanding why they're buying it, just because the price is going up. So you always have that sort of speculative element in every transition. And that's why it looks like a bubble because, you know, it's just going up so fast. And in normal markets, I would say, yeah, it's very normal to see bigger corrections. We have had very big corrections before. So the price action right now is more a function of how many people are aware of it and are using it. You can look at like the Google search volume and other sort of, you know, other things like that kind of indicate awareness and adoption of this. So there is definitely a speculative element. I think that, again, you're measuring it in dollars. And so you can't look at this market like any other market because it's competing with the dollar. It's competing with fiat currencies. Whereas other markets are, you know, just measured in dollars, but they're not essentially trying to replace it, or that's not their main function. So it looks parabolic because it's essentially gaining a lot of traction very fast. And we're at the very, very early adopter stage of the curve where probably less than 1% of people own cryptos. So if 2% or 3% start to own it, you're going to have this sort of, you know, wave, and it's going to look very parabolic because that's how adoption curves look.
I also saw a thing recently that was a really interesting point, that anytime you have a really disruptive technology, for the first while, it looks like a bubble, especially to those outside of it. So at some point, you know, it's likely that the price of Bitcoin will stabilize or reach some sort of a equilibrium against the dollar or against other assets. But at this point where it's growing really fast, that's what's expanding it, is just the adoption by the market.
I think it will stabilize in purchasing power. And right now, purchasing power is denominated in fiat currencies. So in dollar terms, it's gaining a lot of value. And I don't think it's going to stabilize against the dollar because ultimately the dollar is going on the way out. So we don't really know what's going to replace that. And you know, the speculators are basically saying it's going to be Bitcoin. So when you say it's a bubble, you know, you have to look at also the market cap. And I think we talked about this earlier, you know, Bitcoin or the whole crypto market cap is now $500 billion. And if you look at and compare that to other asset classes that are essentially, you know, similar, like gold, for example, you know, because we mentioned Bitcoin's digital gold. You look at the gold market, it's $8 trillion. So that's like 16 times. It could still grow and it would just be as big as gold. And gold is a fraction of all the other sort of bubbles that we can measure in terms of asset classes. And that's all this is another asset class. That's how investors look at it. That's how governments look at it. So if you look at it from that high level, there's much, much bigger bubbles in terms of asset classes. You have government debt, which is, you know, hundreds of trillions of dollars. Global stocks is $50 trillion. Like Bitcoin and cryptos is a speck. It's not even a drop in the ocean yet. And it's very hard to say where it's going to normalize or stabilize when every other system to store value is kind of losing its losing its confidence.
People outside of the crypto world or the crypto conversation that are just kind of getting into it think, oh my God, $500 billion, that's insane. They kind of see it as this cute little pet project by like this nerdy pet project, kind of like the internet when it first came out. But we measure milestones in terms of, okay, so when are we going to overtake gold? Not in price, in entire market cap. These are the milestones that people talk about in this world. And it's interesting to see people's expectations that are just now getting into it completely undermined. Every time something really exciting happens, like Bitcoin shoots up $5,000 in a week and a half, it's exciting to see people kind of have this disappointment on their face, but also a little bit more curiosity than they might have had otherwise.
I think it's important to distinguish the difference between cryptocurrencies and stocks. I had a friend asking me about this the other day. He's like, I've never seen a stock perform like this before. How is this different than a stock?
So, well, a stock is obviously issued by a company, so it's a completely different entity in terms of centralization and the speculation of what the value of that company is going to be. But in sense of what is driving the price of Bitcoin, why it looks parabolic, is because people are speculating it's going to have a lot more value in the future because more people are going to use it. So they're kind of front running that price. And there's always a premium built into a stock price. It's not essentially the value of necessarily the company today, it's what it can be tomorrow, right? That's why Amazon stock price is ridiculous. It's not based on their earnings, it's based on what people think they're going to be able to take over in the future and disrupting all these different industries. So in the same way, Bitcoin is going to be disrupting all these different industries that are multi-trillion-dollar asset classes. So obviously, there's a lot of potential for it to have some value in the future.
Yeah, and we're also looking at cross-border, cross-jurisdiction. Like, there's so many other things that stocks have limitations on that Bitcoin simply doesn't.
Exactly. Bitcoin is global. So when people compare it to the US, for example, .com bubble, that was just the US. Bitcoin is the whole world.
So the other thing that everybody's kind of afraid of, I guess, just to continue with the skeptical tone, is it a Ponzi scheme? Is somebody going to get left with the bill at the end of this game that some of the skeptics are calling this?
A Ponzi scheme implies there's someone at the top who's benefiting from everything else. There are early adopters and people who take risks in this space, and those people are being rewarded greatly for taking those risks, especially if they came on earlier in the game. But technically speaking, it's not a Ponzi scheme because there's not a central entity who's benefiting from everything.
Yeah, Ponzi schemes require new people to come in to sustain the system, and then that's actually much more analogous to like pension schemes, which are much more like Ponzi schemes. So if people look into that, they don't work unless more people are coming in and paying into a system. Otherwise, the whole thing collapses, and that's actually what's happening right now. So a lot of Ponzi schemes are actually stuff that's breaking down, that's creating demand and speculation for alternative systems like Bitcoin. Bitcoin doesn't need new people to come in for the thing to sustain itself. The miners will just keep mining, the coins will just keep coming. That doesn't require more people to be coming into the space. The price, for sure, is affected by the supply and demand, as we talked about. But there's much more obvious Ponzi schemes in traditional finance.
So what are the advantages of being an early adopter? Like, what's the difference between buying Bitcoin, say, in 2014 and buying it now? Can you give like sort of maybe a comparison of the condition of the buyer in 2014 versus the buyer now? And why was it more advantageous to buy in 2014 rather than 2017?
Well, the price of Bitcoin obviously has increased a lot. So if you bought in 2014, then you would have made maybe, 1,000 times? I can't remember exactly.
A ridiculous multiple. Yeah,
yeah,
you'd be
it's
very
a ridiculous
wealthy.
multiple. But, buying Bitcoins in 2014, which is actually, I think it was 2013 or 2014 when we bought our first Bitcoin. And it was very difficult to get it. You had to go through multiple intermediaries to be able to convert digital fiat money into Bitcoin. Although you could buy it from people in person with cash, but we just didn't know anybody. So it was very user unfriendly to get it. So you had to have some technical background and you had to overcome some hurdles, and you probably had to learn some new things. And obviously, most people are not able or willing to do that.
They don't see the reason to do it. So obviously at the beginning, the barrier to entry is much higher. So it puts off people who don't really understand it or believe in it. And at that stage, you are taking more risk because it's less proven. And as something becomes more proven, obviously more people use it, then you're going to pay a higher premium for that because there's less risk. So risk is always correlated to return in any market.
For my own curiosity, actually, because I bought my first Bitcoin 2 years ago, what exactly did it look like buying Bitcoin in the process that you're speaking about, Yuvi? What was the complexity?
Yeah, so there was this digital asset exchange called Werwox. I'm mispronouncing it probably, but it was for buying the Second Life currency. So the game Second Life has its own currency, and you were able to deposit money from PayPal into this Werwox portal and then buy Second Life currency. And then after a few days of holding it, like there was a lockup for a while, and you could only buy a very small amount at a time. And then with that currency, you were able to exchange it for Bitcoin.
I totally forgot about that. That's how we bought the first one?
Yes, that's how we bought our
crazy.
first Bitcoin.
That's ridiculous.
My parents played Second Life, but they never bought Bitcoin, so they missed out on that one.
Yeah, but that was the only way to buy Bitcoin using PayPal at the time. Of course, there was local Bitcoins where you could, exchange Bitcoin directly for cash, but then you had to meet somebody in person. And we didn't have anyone in the location that we were at.
My friends used to buy weed off of Silk Road back in 2011. I've got one of them, actually. He has what might be his public keys left on a thumb drive in his basement right now. And he doesn't know how to access it. We'll find out when I get home what the hell's going on with this. But yeah, imagine that we find the public address and not the private keys. and yeah, who knows how much Bitcoin could be on there, but yeah.
There's so many stories. We've heard those stories 1,000 times of like people who bought, a pizza with 100 Bitcoin or something like that. And today they'd be, multimillionaires.
Yeah, the first Bitcoin transaction was 2 pizzas for 10,000 Bitcoin. First commercial transaction.
That's ridiculous.
It's insane. So we know the ills of buying Bitcoin in 2014 and 2011 and how insecure that is. But how can our audience go get Bitcoins for themselves today?
We're going to cover that in the next episode, so stay tuned.
There we go.
Thanks for listening to Crypto Radio. To get the show notes, links, and other resources from this episode, go to cryptoradio.io/2. In the next episode, we're going to talk about how to buy Bitcoin and what to use it for.